Now let's discuss updates in oil refining and oil production in Nigeria. Joining me for this conversation, we have Halimah Adediran, she's a senior associate at financial derivatives company. Great to have you on the show. Good morning.
Thank you for having me, Ladi. Good morning.
Fantastic. Yeah, we have another latest from the Dangote Refinery, reducing ex-depot petrol price by 25 naira to 774 naira per litre and ending its PMS lifting incentive scheme. How might this influence, downstream pricing trends and competition with imported fuel?
Okay, so the Nigerian oil downstream sector is oligopolistic. And what do I mean by that? It entails like a few players, Dangote Refinery, NNPC Limited, and some independent marketers. And so before now, we saw that Dangote dropped the price of PMS per liter by 100 naira in the festive period. It's just like a giveaway or like a festive discount to help in terms
We
of
like giveaways,
demand pressure, and to help in terms of managing the lack that we normally have when it comes to oil, petroleum in the festive period. Now coming down to this time, this is more of like a marketing strategy and like a price war in order to capture more market share in the downstream sector by the Dangote Refinery, which is a good one for pricing. It's a good one for inflationary pressure. Before Dangote dropped the price this week, we've seen other players too in the downstream sector doing the same. So this means more consumer surplus for end users, and also it's a good one because it's reflecting that the downstream sector is now deregulated, unlike when we have the price being capped because of the subsidy in the previous event that we normally have. So now it's a good one for Nigeria in terms of companies or households or individuals using PMS. It could help them to at least have a view of how they can invest and how they can do their pricing. But when we look at what is happening in the global oil market, we'll see that there's like a divergence when it comes to the domestic PMS price and the global oil price. And this is because there's always crude oil is always bought forward in the global market because before it is being sold to the end users as a refined product. And so that's why we are seeing that it's not moving in tandem with what is operating currently in the global market, but still it's still a marketing strategy much more than reflecting what we have in the global market. So it's a good one for the economy and inflationary pressure.
All right, talking about giveaways, I guess the average consumer in Nigeria needs as many giveaways at this point. But let's look at consumer impact now. To what extent do you expect this price adjustment at the refinery level, to translate into lower pump prices for motorists, across Nigeria?
That's what I just said, that most times when prices are high, we quickly see the effects. Companies quickly shift, prices move faster than even the change. But we've seen that in events of Nigeria specifically, or in a peculiar case, most times when prices of inputs drop, we don't normally see the resultant drop in the prices of transportation, in the prices of goods and services. And this is because it takes longer to translate into that. So we might, if this drop lingers or it extends to a reasonable price, we might see the effect in the price of transportation. We might also see the effect in the price of some goods and services.
Is it until the refinery cuts it to about 500 that we can actually feel it?
Yes, but it's no longer regulated. It is deregulated, as I said earlier. So you might not be able to have that slash because it will mean a loss for the refinery. So it has to reflect the input cost and the cost of the crude oil in general and other cost that is associated with the refining of the crude oil.
All right.
So we can't just see a slash.
Okay, let's look at oil production now. Latest data, it's another quarter miss from Nigeria. How are you seeing this play out so far? But it's not just Nigeria, looking at the data, other producers too didn't really meet their quota.
Yeah, so it's a general thing. So, and I think Nigeria is part of OPEC, as we all know, and this body monitors the data as regards what is the production, what is the condition of the country in life. And so we have the primary source, which is also always reported by the Nigerian authority, and we have the secondary source, which is managed by data analysts and agencies like OPEC. And so for this January, we saw that for the primary data, which was reported by the Nigerian authority, we saw like a slight increase in Nigeria's oil output. However, in the secondary data, there is a slight decline. So this is like a divergence. And when this happens, it could mean that credibility might be questioned. Though both source is showing just like a slight change, which is a good one for Nigeria, showing that investment and also licensing rounds and some efforts to reduce oil theft is gaining ground and yielding some results. But also because we have that divergence, we might not be able to push for more quota in the OPEC for now, because we are not seeing a direct report when it comes to the primary source and the secondary source. And also it could affect budgeting, forecasting, and even so many other investors that might want to come into the sector to invest.
Right.
So that is it for now.
And I'm sure that would also impact, feedstock for our refineries at this point. Thank you so much, Halimah Adediran, Senior Associate, Financial Derivatives Company. Thank you for coming on today.
Thank you for having me, Lad.
All right, let's go global.